All right, good morning, everyone. Happy Monday. So we're going to do, like always, a brief broad market outlook. We'll go over a couple top ideas, and then we'll go into any of your guys' ideas that you guys want to discuss. So of all the sectors right now, again, energy still, is pretty strong, still kind of flagging up here. I think one of the things to note, though, is we can, with these trend lines, this was that very steep trend line, kind of the breakout stage. And now we're starting to see energy kind of shifting over. You can see now this second, more not as aggressive trend line, whereas energy is starting to kind of consolidate and start to flag out, which, we kind of saw, back in October, November. So just being aware that, we're shifting, it's shifting out of its breakout market into more of like a consolidating / basing market, just to, kind of be aware of that. And then moving into pretty much every other sector in broad market, pretty much everything is just kind of setting up. Hard to really come in today and try to buy versus low. We did, Shake did a great job last week of posting that comparison of the 2018 bear market to what we're seeing now, and it's almost identical. At that time, we were running to all-time highs. We broke down. We based out for a few months. We retest, we traded in that range where we tested resistance multiple times and support multiple times. We ended up trading lower. The only real difference between these two, as identical as they can be, is the measured move of the range that the SPY was trading in last time was much smaller percentage-wise, where the measured move of that official bear market was to the penny, like that measurement from the high to low was that 20% drop. Where this range, this 40-point range that we've been trading in, this measured move, either, if it was to break up higher, the measured move should be back up to 500, and then measured move to the downside is a little bit lower, and then again, you have to factor in that when you do get to that measured move, that's usually people are the most afraid, and you get that final kind of push. And that was a bigger mistake that I made in the pandemic, where I waited for this major retest right here. And I was like, all right, this, the market's down in, bear market territory, down 20% plus. This is major support. This is time for me to start to buy. But I discounted the fact that people were freaking out and not thinking logically. And that's that last push. And then that next push is much farther than any of us could really have imagined. And that's kind of where, for now, this seems to be the short-term low. But I don't think this is the low for, the next few months. But I think if we do get that push down a little bit further, we're going to find some really good opportunities. So moving into some individual sectors, we see the Reits. We see this, downward, breakdown stage coming right into that support area. But again, this is very tough to, you can say, oh, I want to buy support down here and I want to sell resistance, but it's a lot of work because you're just fighting the trend. There's definitely, spots to, trade in here, but overall the winds are against us. So, being much more hands-off right now is often the best thing to do, when this is oftentimes that we try to want to do more when it's unnecessary. Same thing in the industrials. Very clear breakdown stage. Again, could you be buying down here near support and looking to kick into resistance? You could, but again, it's a lot more work than we think it's going to be. Consumer discretionaries breaking down. Again, for a lot of these major sectors, this major breakdown area for me is pretty much going to be the hands-off area for now, until we really start to get back above here and start battling with these major breakdown areas, because this will now become resistance, what was support. And I don't want to be shaming myself up with, trying to get involved down here, when the likelihood of it continuing that H over pattern is probably more likely going to be the case than this dramatic kind of V bottom. Same thing with tech, waiting for these support buybacks for now until we're really starting to break back above that prior support area. Again, a lot of the same stories, a lot of these sectors, they're all just kind of short-term bottoming, but probably not the real bottom, just more of a short-term bottom. Materials and healthcare both, near support, haven't really broke down yet. But again, with every sector breaking down, even with the major markets, I forgot who posted it earlier. I think it was last week when they posted all the international markets. when you see all the markets in general doing the same thing, you see China, you see Europe, you see Germany, all the major markets, they're all down 1%, they're all down 1.5% pre-market. Everyone's going to follow suit. So that's not the time where you're like running into the fire, trying to find deals. It's when everything is down, they're all going to kind of get flush. And that's where even the names that are holding up, materials and healthcare have not broken really support yet, but it's more likely just a matter of time until they do, as they kind of just follow suit with everybody. Again, staples still kind of middle of the range, and utilities, again, same middle of the range. But again, they still probably have to come down further. And then telecom, again, we're seeing very clear breakdown stages. That stage 4 breakdown are avoids, things we don't want to be involved with. We want to wait until those bases start to form. And with these major markets, with these major sectors, these bases take much longer to develop than an individual stock. An individual stock can base out for a week or 2 weeks and work its way back to highs. When you have an entire sector of 50 or 100 stocks, it's not going to be that quick. It's going to take some time. So this is when you don't want to get too crazy and wear yourself out when we haven't seen the bases yet. When we see these lows, you end up seeing them again. So you're not really missing much, but in the moment, it could feel like if you didn't buy anything on Thursday, you feel like you're missing out. But if we sell off again today, you really weren't missing much. So, don't let the market kind of trick you into doing things. Same again, telecom and biotechs. We just see this very clear breakout stage. Just avoiding and doing less seems to be the move. Individual stock wise, really nothing on my radar. Again, this PG still kind of setting up, but again, no orders in. My best idea for last week was really just buying a SPY above 407. So that was my cue, just being very hands off. Lesson learned from one of the members of this last week. I forgot who it was. They were looking to buy this FNKO after that earnings reaction. And almost exactly what we were talking about, having you and I last week, where it's hard to expect to buy this through this high because it looks amazing, but the probability of it actually continuing is probably not there. And exactly what we were talking about was the case. So if you would have ticked in 2150, this thing reverses, shakes out the low, you lost 10, 15%. And then it's right back in this area. So that's like that super wide range where this is a good lesson to next time you see anyone has a huge earnings reaction, that day 2 buy is going to be like extremely difficult from like a risk reward standpoint. This was just one going through the names from last week that, really hit home of why we, finding those tight entries is key right now. So again, having your Hershey's is still setting up very nicely. I forgot who was looking at BMY. BMY still looks really good. It's AMD eventually up through this 100. Again, before we were talking about this base, a lot of these names are breaking down. This is a very clear breakdown stage in AMD. This prior support, this 100 area, is now resistance. And eventually up through 100, it's probably going to be a very nice, base buyback. But it's not going to be today through 100 or tomorrow through 100. It probably will take a few months or at least a month or so more to tighten up where we can find that eventual break of that base. CVS, again, energy has been strong. CVX still setting up. But again, we've talked about how the energy sector is shifting more of a consolidation than a breakout market. So more of keeping this on the radar. And that's really it on my end. If there's any ideas or stocks you want to go over, definitely can pull those up now if you like.
Yeah, well, you took away all the charts I was looking at. So, that HSY looks really good, a lot of relative strength. For me right now, I'm just not too concerned about trying to buy resistance breakouts just because there's just not, like you were saying earlier, there's just not a lot of wind behind those sails. You kind of have to have the whole market behind you to really get some big moves. If I am buying this, it's like a quarter of the size that I would usually take. Just to kind of get a feel for the market, see if things hold up. But I also don't want to get stuck in something that's just consolidating up here and not really moving. Another one that I really like that's on the shakedown is this LLY that I had been watching last week, actually. I was looking for a short through, you don't have the 50 moving average there, but the 50-day is kind of sitting at like 284, 285. So I was looking to actually short this to the downside, and it held that support really well. So kind of just building that inflection point between like 282 and 290, 295 area. So could really go either way. So I'm watching this one either to the upside or the downside. What else do I have? Like you mentioned, AMD starting to consolidate between that 100 and 84 area. I don't think it's ready for a big swing, but I'm definitely looking to sort of trade this range. I think that if it can come up to that 100 area and it rejects, I'd probably look to short it right there for a really low risk trade. And then what else we got? Eric actually just asked about ALLE. He just wrote thoughts on ALLE. I'm not really sure where he actually posted.
Again, very similar, kind of like the overall thing we were talking about, where we can see this breakdown stage, lower highs, lower lows, and we can see it. And with these stages, like even with that energy, energy was in that breakout stage, and it's starting to transition over to like a consolidation or a flagging stage. So they overlap. The stages will overlap, and we're seeing this here very clearly. It's a very clear downtrend we want to avoid. And now we can start to see the names starting to base out and trade more horizontally between this like 120 and 104 for now. So I think you really got to just wait until 120. And that might take, again, this breakdown stage was, let's see, September. So 8 months, this name has been breaking down. It's been basing for 1, 2, 3. So these are like these real examples. It broke down for 8 months. It's been basing for 3. And that's where it's like with a lot of these other charts that are in these very clear breakdown stages, it takes months for them to really get their footing. But that's, when we get these bases, those are really hard outs. And most traders can see that. And then they respect it. And then you can get that follow through back to the upside. But it just takes time for the market to make that footing, or the stock to make that base, that footing, before it's going to sort of work its way back up. So I think in time through 120, probably going to be a really great trade. I think for now, trading inside this range, for someone like Eric, who's a little bit more active, there's definitely, even like for AMD, like a lot of these, like even Shake was saying last week, like you really have to buy the ugly and sell the pretty. Yep. And that's when, like I was trying to say in the big picture, like you have to still be scanning charts every single day, because you're going to find that one little diamond in the rough. And it's like you mentioned, like not buying resistance, not buying the resistance breakouts. But if you can see these names that are coming into support, AMD coming into 84 and under 84 is horrible. It's probably a very obvious short. But this next day, if you're able to, you're scanning and you're able to buy this thing at 10 o'clock Friday, up through 89 versus that low day, that's, you got some, even if you had like a low day stop, that's the stuff you're kind of looking for. And that was even for me, when I put in that 407 buy stop for the SPY, the market looked horrible, came into support. It was like at this low, and it was such a tight range, like off, like within the first hour of the day, where I'm like, if this is going to bounce, which it obviously didn't, but this day, I can pretty much go super aggressive. I can put my entire account into the SPY up through this buy, because I'm risking $2 in the SPY, I'm risking 0.5%. And it could easily bounce 10 points, 20 points, getting in a 2 or 3 day move. So that's where, if I wasn't scanning the market and I didn't see that, I would have missed it. Again, it didn't work, so it doesn't matter. But that's when you can find those deals. So if you are scanning the market and you do see, okay, this thing came back into its prior low, held, little doji at low, okay, I'm going to look to buy on the way up if it is going to get follow through, and I know where my out is. And those are like those, but those are going to be much more tighter trades. Where like if this was the example, then closed up 10% first day. Okay, I take a little bit off, raise my stop to low a day, and if I get fall through the next day, I sell into the pop and I take the money and I'm on to the next thing. But that's going to be like for Eric or for Shake, who are more active, that there's going to be those moves. But for like me, who's a little bit slower, this is not going to be really the time where I'm going to shine, unless I can find like one really good idea and get it.
Yeah. So ALLE, basically to summarize that, like I think through 119 through 120 area is going to make a lot more sense. Or trying to, since Eric is an active trader, I know his sort of style is like kind of try to see if it rejects that 50-day, which I know you don't have on your chart, but if it comes back down to that 107.50 and see if it holds that pivot area, and then look to sort of long there. So you have such a low risk there versus 107.50. But I think here you're kind of just in the middle of the range, so you don't really have much of an edge here. Yeah. Then we have some member ideas here. So Gabriel's looking at URI 300 versus 288.
300.
So kind of just looking for like a buy off support and looking to buy on the way up.
You said verse 288?
Yeah.
All right. So this stuff is really random.
Yep.
Stop is super random. Let's see. So there's really nothing here. I mean.
Yeah, I agree. Gabriel, you gotta wait for this thing to base out a little bit. 288 is a very random price. If you told me 270, that makes more sense. But obviously the risk is 10% on that after the stock moved, from 270 up to 292. So probably a pass for now.
100%. Yeah. If you were given a verse here, like I said, that's perfect. This is a dumb money stop. This is just nothing. Yes, and really nothing here.
Yeah. Christopher's got a few of them. To the long side, he's looking at PEP 175. I have this on my focus list too. 175. I would just keep it simple and wait for that 178. Because right now, if you're buying 175 and it gets rejected at 178, you're basically your upside's $3 and your risk is at least $7.
Yeah.
So you probably want to see this tighten up a little bit more, or even try to buy, like if it sells off again and then starts to reverse, maybe build a little position there. But I think if you're buying 175, you have a high risk of a lot of resistance there at 178.
This reminds me of like that Humana where it's like 475 has been the spot, and I remember Abby called this one through 440, and I was like, I would just wait for just wait for the breakout, but like she still would have gotten a nice little move. But that's like the tricky part is because that, like when it gets up to here, like you still want to keep it because you think it's going to break out, or you even kind of want to add, and then it still reverses, and that's where like it just kind of chops you up where.
Yeah.
Maybe, say she added here. It's like, oh, this thing looks amazing. It's, chip shot of all-time high. And then you get this day, and then it's, you're getting pushed out or whatever it is. But that's where, same with this Pepsi. It's like you said, I would just wait for the blue sky.
Yeah, you really have to keep the mindset of being in and out of things in maybe 2-3 days in this market, just because you can't trust these moves. And every time you think it's like, okay, this is the one that's actually going to work, the market's going to start going up from here. It's not going to come back down. Unfortunately, we're usually more wrong about that than we're right. And you're better off taking those profits when you have that move, you have the strong move, it's coming into resistance. Like, don't start adding there. Just take your profits, reduce the trade, see if it consolidates, and then maybe look to add in a week or two if it really holds up. But yeah, so this PEP, I think 178, you're probably at a better spot. If you're looking for that quick trade and you just have like today's low of day stop and it breaks through 175, and you're just risking, $1 trying to make 3, that's fine for the active trader. Yeah, as a swing, a little bit tougher to buy there. Yeah. Next one he's looking at HSY. We went over that one. Next one is MUSA 252.
NUSA?
M as in monkey. USA. Yeah, Murphy.
Wow.
Yeah, this is it's a flag at highs, but you got to also keep in mind 4 days straight up off the pivot. So the proper out is down at like 232. You're risking $18. It's a tough one. I would definitely rather, like, if you look at a weekly chart, this thing is so extended. And it's hard to buy these. Like the easy move was buying that descending trend line, or even buying through 200, psychological level. But here makes it kind of tough to buy, especially because it keeps on making these little higher highs. So it's almost like in an ascending channel now since that flag started. This is more something I'd look to buy off support. So when it pulls back to like 240, 235 area, that's where I'm looking to buy up and then sell into resistance. Just be a tough one to buy through resistance up here.
Yeah, like with this, also like it pulls in a couple days. It's near support, okay, I can, buy up 240 versus 230. Okay, cool. But now, like I said, buying 250 here.
Yeah. On the bright side, it did have a good earnings reaction. So it had that earnings, kind of had a controlled sell-off for 3 days and then pushed back those earnings day high. So, I mean, if this could really actually go sideways, like for like a few days, you could look for like a momentum trade right through that earnings high area of 250. But it really needs to put in a new support instead of like having to have your support all the way down at 230. Yeah, somebody did call that Musa back through 126 way back when. It's always funny to review those call outs. The next one he has to the long side is Dorm through 100. We got 10 minutes, so let's try to speed these up. This base is nice. The only problem is this average daily volume is only 126K. So, or 126K average daily. So you have to keep that in mind.
One good thing is, like, again, we've been talking about like these bases, like this is like the main point of this video has been like the breakdown stage and shifting into the base. So this one, again, Dorm broke down, then it shifted into this base, took many months, nearly 5 months of basing. And this is like exactly the time. Again, now I think he said he wanted to buy 100, so I guess he's like a little late to it. But now that it's starting to actually break out of this base, this is like often the times where, again, you're not going to blindly buy it today, and it's not going to just never come back into this space again. It's, more likely to be back in 95 in a couple of days. Now that it's starting to break this area and show us that the base is ready to break, he's like really on point with where he wants to keep an eye, because now he's not early. Like, it's oftentimes like the market right now, we're like right here in the market. Like, we have 2 days up. We think it's the bottom. We think we're never going to see his prices again. And it's just going to go, straight back to highs. And that's really not going to be the case. It's more like going to be kind of like this chop like this, where it's going to keep looking horrible, for quite some time until we start to get these types of moves. But this is the parts where, okay, he's not going to only buy 101, but if he sets some alerts and it does pull back into under 100, into 95, or, down here, and he can start to position himself in for when it does start to turn back up, and he's buying it again up through that base the next time, he's going to have much more probability that this base will continue higher, because it's already starting to show us that. And it has developed for enough time that it probably is ready to start.
Yeah, you can see it looked perfect in March too, when it was approaching that 100 level, when it flagged the first test to the left. Yeah, right there. Now you had it there. Yep. So it came up to 100. It flagged out for a few days, and you're thinking this thing looks perfect. And then it just ends up failing, because it just hasn't had enough attempts at that resistance level yet. It was only the first time back at that 100 level. So now this is its fourth time. Probably a little late to the buy here, because if you really look at like what it did last week, it went from 92.50 up to this 101. So if it can flag and sort of trade in that range for a couple of days, then you could definitely look to buy this up through that 100, 102 area. Yeah. He's looking at a couple of shorts also. He's looking at McDonald's through 242. A lot of people are looking at this one. Looks like it's kind of rolling over here. Sitting under all the moving averages. So, I mean, but it is holding up over his last 3 days. It's held up. So we'll see. I mean, it's a tight inflection point. Could be a support buy or a short here.
Yeah. I mean, I see the short. It's just tough, like, for me with these, like, again, if you look at this chart, it's hard to want to short this because every person on the planet that owns this stock, except for these people right here. Other than these people, they're fucked very marginally, but everyone else is not. So you're not going to get that like real panicky breakdown. It's going to really just be like the short-term traders kind of try to break that level, which is fine. But this is not like you don't have like the probability on your side. I know that
gotta be quick with it. For sure, you got to be quick. Take a profit. Day one, day two is like really.
But most of it's like with the shorts, find the stocks, especially in a weak market. Find the stocks at 52-week lows. Like, go on the S&P, sort high to low, and I don't know why it's not showing me the worst names from Friday. Did everything?
That's because everything was green on Friday. Everything bounced.
Oh, okay, we got it here. So it's like this is more like, all right, Twitter got smoked.
sort of did get smoked.
Yeah,
but that's all like buyout news.
You look at like these shorts. Like my point of this is like, look at the worst names right now and look for the shorts there. Look for those shorts down through these lows, because this short here down through 94, when it's breaking support, I guess that's not a good example.
Yeah. Another one he's looking at to the downside is MU 66.
Yeah. But yeah, so again, that's just my thing is just, again, I'm not the biggest shorting person. But if you are going to do it, look at whatever the sector you're looking at, but look at the worst names, the names near 52-week lows, and those you're going to get. They don't seem like you're going to get the most upside to the downside, but once they take out those lows and everyone who owns the stock is now underwater, you're going to get much faster moves to the downside when it doesn't seem like that. It seems like this McDonald's short, I'm going to short 240, I'm going to cover at 200, and it's like, that's best case, you get 20%, which is like a grand slam, where if we found some $30 stock or $20 stock near lows, that's a 20% move, could be a couple days, like down through this Western Union under 15, it goes to 13, that's 20, and that's a couple days, and that's much more realistic because everyone who owns this stock is screwed when everyone at McDonald's really isn't. So that's just
okay. What else are we looking at? He was also looking at MCHP, but kind of similar setup to MU, where it's still a pretty strong stock. He's looking to short it through the support.
Yeah, no, this is like, for me, I'd be buying this up through 70 versus that area.
Kush has got a few names here. He's looking at Calm, but he's also looking at the downside through 50, or Calm, CALM. Sorry.
Oh, Calm.
Yeah, like Calm. That's a weekly. So it basically couldn't close above the 50 moving average. So he's looking to short it through that 50 level versus 52.
See it. Yeah. A little
kind of a textbook bear flag there. I mean, I think this is, even though it, like you're saying, it is kind of still at highs, it's pretty strong. Most people are winning in this one that are long from before. But I think it's a pretty textbook bear flag. I mean, I think you can catch a few dollars.
I like this way more than McDonald's. And again, I feel like I'm like contradicting myself because this name is strong and as is McDonald's. But the difference is this name has gone up so much so quickly. This is up 100% in 5 months.
Right.
This is different. This is an exception to the rule because this name, like we've seen with Zoom and all these other names that had these insane vertical runs, these runs are not sustainable. And it seems like that in the moment that it will continue, but they just never are. And that's why even for the broad market, when we get these bases or these breakdowns, they're very healthy because it doesn't let the market get to this point where it's this vertical run that there's no way to go than coming down. So for that name, I'd rather short this name that's already gone up so much percentage-wise, that more than likely, okay, you can short 50 versus 52 and realistically probably cover,
45, 40,
47. 40s, like realistically, where McDonald's is not going to get that, if you got a 3-day 5% move at McDonald's to the downside, like that would be asking for a lot, where this could be 1 day down through 50, could be that. So this is different. This one, I definitely like this is short because it's gone up so much, so quickly, so aggressively, and now no one's really coming in to defend this name unless they're, small pool of people that are
unless they really like food from Maine. Next one is Simo. He's looking to go long, SIMO. They're going to go long 93, which I like the entry, but he's looking at staggered stops, low of day, and 90. And I think Kush should just keep it simple and keep it under 90. You don't need staggered stops on this because your staggered stop is literally like 50 cents higher. So it's not necessary. Just keep it at 90. But I like this setup. I mean, it had obviously a really nice earnings gap up. And it's just, it pulled back a little bit, sold off, controlled selling, and now just really, really tightening up. Jace just mentioned the 3 inside days. So it's really getting tight. The risk reward is there, I think.
He wants to buy it up up to this area. But it's either way. It's either you get that buy for 93 or you get that short to 90 and you have a huge gap to fill.
Yeah.
So it's kind of either or. And this is another same thing, very, very strong, very vertical move. That's, again, I'm not showing strong names. This name,
yeah, it could definitely go either way. I think so. Definitely want to keep an eye on to go up or down. What else? She's got STZ 251 versus 243 long.
I like it. This is another one kind of like with that other, what was it, PEP? Probably this too. Like I see like this tight area he's looking at. This is probably one where, just buying to that all-time high, probably not going to happen for a while, but probably going to be easier than buying here versus here, and best case getting moved to here. It's going to like kind of one-to-one. So definitely good, strong chart. It's nice little base here, nice little flag, but you're kind of one-to-one trading inside this range that probably easier just waiting, like the PEP, just waiting for the blue sky area than wasting your time in the middle.
Yep, and market just opened and pretty much done.
All right, guys.
So thank you guys for coming, and give us a like and a comment in the YouTubes, and we'll see you guys at noon.
Yeah. All right, man. See you guys in a little bit.
Later.